right, so we have reached graduation day, right? This is where we pat you on the head and tell you good job and send you about your way, right? No, not even close. We are at the end of boot camp here, but obviously the general idea here is that this is your start, not your finish. And whether you choose to participate in the room and grow that way, or do it on your own, or a little bit of both, is entirely up to you. But you have a support system here. Typically, when you sign up for boot camp, you're here for a month at least, so that you can see this more than once. It's a lot of information, and so if you look at this as, well, I reached the finish line, that's really not a very good idea. What we want you to do is start putting together a strategy for how you're going to approach this and how you're going to make yourself a success out of this. And today we'll go a long way to help you with that. But if you look at this as really your first stepping stone, and you comprehend the work that you've got in front of you, you know that it's something that you're going to have to build from. What we're going to be talking about today is just that: how to build a true strategy. Okay, every component of it. I want you to come in the morning, and I want you to have a strategy that you can do every single day to set yourself up for another profitable, consistent trading day. And as you begin to do that and realize another profitable, consistent trading day, you're going to find that you're going to be passing up days and moving into another profitable trading week, and another profitable trading month, and another profitable trading year. Okay, that's the process we're getting to, and we need to have a strategy. We need to have a short-term strategy, a mid-term strategy. We need to have an overall plan. Okay, most of us have anywhere from 5 to 500 trading books somewhere stashed in our house, right? Some bookshelf or box that's filled with dust of books from trading ideas past, right? And the one thing that all of these have in common, whether it's one book on technical analysis and one book on something else, the one thing that they will all have in common is that there's going to be a tiny little section on the how-to and a huge section on creating a trading plan, or the right psychology, or things like that. And most of us call that fluff, right? Enough with the fluff, just get me to the how do I do this. Okay, but if you realize that, not everyone who's written a trading book is a complete charlatan. There's some great information out there. And so if you figure there's at least some portion of all of these books have some sort of value, and the one common thread between them is the fluff, then maybe that's the part that you should have paid attention to in the first place, right? The point is that without a plan, you're not going to get anywhere. And so it's our job to help you develop that plan. Okay, and it can't be, well, I'm going to come in and I'm going to chase everything that you do because I need to make money to cover the cost of the course. That's not a plan, right? That's not even remotely a plan. It could be your strategy. It'd be a pretty lousy one, right? We should all be beyond that. We should all be at the point where we're excited because we've really learned something this week. We understand some things that we did not understand before, and we should be ready to build on that and say, you know what? If I can understand how the market moves up and down, then I ought to be able to understand how to really build a career out of this. Right? Think of it this way. If you are a small business owner, or you're about to be a small business owner, you get an idea and you say, yeah, I really want to make my widgets, and I'm going to sell my widgets. You're not going to go out and go to a bank and say, listen, I've got this this idea, this is what I want to do, but I have no plan for how I'm going to manufacture them, how I'm going to market them, how I'm going to sell them, how I'm going to build my business around it. I have no plan for that, but I really like the idea of widgets. The bank's going to look at you and go, sorry, we can't help you, right? They're not interested in backing somebody without a plan. And being a trader is a business. guys. It is. You sit down every day and you make financial decisions that are either going to benefit you and your company or that are not. Okay? And that's why I say, if I can't see something in the market, it's more advantageous for me to not trade that day than it is for me to put money at risk. I can do okay not making money today and not making money tomorrow if the next day I can then go about my regular trading plan. But what I can't do is just say, well, I have to trade to make money. So I know I don't really understand what's going on right now and it's not clear to me, but I'm going to go ahead and do that. And that's just not that's no different than the guy who goes out and says, well, I don't really have any financing or a business plan, but I really want to own a restaurant. And I think I'm a pretty good cook, so I'm gonna go and undercapitalize myself and open up a restaurant. I'm sure wherever you live in the world, you see this all the time. We have it around here. We've had some really great restaurants right around us close. Poor management. If you can't turn a buck in that business, you're out of business, right? And it takes a lot more than just being a good cook. And trading takes a lot more than having a great piece of software. Right? It really does require you to have a very logical strategy for approaching something so that when something goes wrong, you can make changes. You know how to address what went wrong. Okay? What did I do? What did I miss this morning? Where did I go wrong so that I can go back and fix that part of my plan? Right? I used to spend a lot of time doing business consulting, and it didn't matter it started out I was consulting for businesses I was very familiar with, but it got to a point where it didn't matter. It didn't matter if I even knew your product or anything else. I could come in and I could look at 3 years of your books and I could tell you what went wrong. Right? Because there's just some underlying fundamentals. What were we doing this year to make so much money? What did we do this year to spend so much money? And how do we combine those to make the right balance the next year? And that's what you're going to have to do in trading. So I want you to come in and say, look, this is what I'm going to do every day. I'm going to start out and I'm going to have a pre-market trading analysis. Now, I can do that at night. I can do that in the morning, whatever. But I cannot expect to show up 5 minutes before the market opens and have any sort of game plan for how I'm going to approach something, right? I don't need 5 hours. I don't need an hour. But I need some time where I don't have to worry about missing my opportunity because I need to go back and look at some other things. So you need to set aside some time where you can learn how to read the chart and determine your daily objectives. Okay? And then it's time that we seal everything off because we realize that the opening range provides the most opportunity. Okay? The opening range is going to provide the most opportunity for us, and it's going to trade a little bit differently than the next 30 or 45 minutes. So we need to have a plan for how to attack that, right? How do we set some early targets, and how do we read that part of the auction? And then as the market really starts to develop in the morning, we need to have a strategy for the different periods of the session. And what I mean by that are what we discussed yesterday. The first hour, the second hour and a half, the hours after that. Breaking up the day and having some sort of concept for whether or not my participation is worth the risk, right? And if we can do all of that, and we can do that day after day after day after day, then we ought to be able to formulate a bigger plan for how am I going to get from my basic understanding of this to making sure that I can execute properly, to making sure that I'm profitable, and then taking that profit and multiplying it, right? Those are the things that we've got to do. So we're going to start today with morning analysis, okay? To me, this is what makes or breaks your day. So it really, it kind of irks me when I see people that their interpretation of it is I need to be at my desk at 8:30 in the morning. Well, I really hope you've done a lot of work the night before. I really do. You have to be prepared. You have to be prepared. You have to have that picture of the puzzle in front of you. And the way that we do that is we start out just very basic. Very basic. We're going to locate the previous day's settlement price, the previous day's high and the low and the overall value area, which are the orange lines that are on your chart if you are using the software, and otherwise they're when you log into the room, right? They're right there with the pivots when you log in. I need to find that stuff so that I can start to build an idea of where are we trading now and what's likely to happen at the open. I want to look at the previous ranges that we've traded. Where are we in comparison to where we traded earlier this week or last week or this month? Give me a big picture here. Give me kind of a big picture of what's going on. Then we're going to start locating those key transition points that we talked about yesterday. Okay, if I can see where all the ranges are, I ought to be able to find where the last responsive buying was, where the buyers initiated trade, where the sellers initiated trade. I need to look at my chart and say, can I derive anything from this? I don't need to go back and look at the order flow. I don't need historical data on the tick by tick because I'm not a fool. I know what happened. I was there. I know what happens when we are trading in a range and then we break out of that range. We have buyers initiate trade, right? And so throughout, you'll hear me say it throughout the day when I see something that looks to me to be fairly significant. I'll tell you, hey, I'd go annotate your chart right here at whatever price it is. Mark that off so that in 10 days' time we recognize that, hey, not only are we pretty clear on where this happened, but we know exactly where it happened, right? So you'll hear me mention things like that, and you should get in the habit of having a chart or at least a notebook that you can scribble in every day of key important levels that you see things happening, so that that you have that information at hand and you're not worried about trying to go scroll through some 400 period history of the order flow, looking at it in small probes and rotations. Right? Give yourself a 30-minute chart that you just mark up. There's nothing special about a 30-minute chart. It's just a good way to look at the last couple of days all on one screen, right? Then what I'm going to typically do is look for volume distributions. We talked about profiling yesterday. Again, this is something that's obviously optional to you. By no means do I want to force that upon you. It's a huge undertaking to learn how to profile. But it can be helpful. And then I'm going to locate the important ranges, right? Every day I tell you guys, today the expectation is a 62% chance of consolidation, whatever it may be, and I'll give you a range. Now, one thing that we're working on, and it's not going to be coming next week, so don't ask me to give you a date. We've got a huge list of things that are needing to get done, but one thing that we're working on is making that a web database, so that when you log in to the website, just as you get the pivots, you'll also be told what my percentages and my range projection is. Okay, and that'll just make it a lot easier for everybody who is right now trying to figure out how to build a huge database of trade classifications and everything else. You're welcome to do it on your own, and I encourage you to. If you're like me and you love to data mine, I encourage you to do that work. But I'd also say, do you really need to add a lot of extra time to your what you need to do as a trader right now? Probably not. I prefer that you focus on the things that aren't going to eat up a lot of your time. So we're going to locate those important ranges, whether it's the daily range. We're going to locate how far we are from settlement. We're going to locate where an average range might take us to. How far are we away from critical points? Just some basic stuff. Okay. And once I've got that sense, then I can compare any technicals that I might be using. Now, yesterday I told you I really don't use any technical analysis at all. The only exception being the pivots that I've come up with. So that's usually what I'll do, is after I've made my determinations about what the chart structure looks like, then I'll go in and say, well, does any of this match up with the technical calculations that I've been able to come up with? And if they do, then obviously I put more weight on that. So I like to have that kind of working with me. All of this shouldn't take you more than about 15 minutes. The first couple of times that you do it, it's going to take you half an hour, 45 minutes. You're going to be way too concerned about way too much, and that's all right. What I encourage you to do, and I make this offer to every single one of my students, I encourage you to go and annotate about 100 charts. And I don't mean wait for 100 days. I mean start by doing Mondays. Right? Do Mondays, take a snapshot of it, and send it to me. Don't give me a dissertation on analysis. Just send me the snapshot and say, hey, am I making any sense out of this? And I will reply. And if you do that one time, you'll get 1 time's worth of my time back. Okay? I'll tell you, this looks good, I see this a little differently. If you do it again, you're going to get more feedback. And if you do it again and again and again and again, you're going to get really good at this. And I promise you, you'll get a lot of my time. The reason I can say that is because for the 20 or so students that I had last year, I think I have 2 people that actually send me charts. So I'm not overly concerned that I'm going to somehow get bogged down with hundreds of you doing it, because nobody does the work. And it's okay. I understand. You don't want to do the work. You want to wait and watch me do it, or it's not worth sending it to me because you think you're doing a great job, your numbers match up, whatever. But for the most part, nobody does the work, and that's unfortunate. Here's a resource that you have. I'm here. I'll help you with it, but nobody ever does it. So I'm giving you the same offer I give to everybody else, and I hope you'll take me up on it. Okay? And my point is that what you can do after you've done a few and you get a sense of what you need to accomplish by doing it, is that most of you have a charting platform where you can go back and look at the last at least 180 days or something like that in intraday. And so go back and do it. Don't spend a whole lot of time with it, but practice is what makes you good. So after you get 4 or 5 under your belt, then I want you to go back and start at like October 10th. And I want you to do like 50 of them. Maybe one weekend or a couple of days. Go back and spend some time. Don't look forward. Don't tell yourself, oh, well, I would have picked that number. Go back and say, I'm going to do this, and I want to know if I can even understand by looking at something as basic as a plain old-fashioned candle chart. Can I make assumptions about what's going to happen? And I promise you, you can. And you don't need the historical tick-by-tick data to do it. You just need a basic chart and a little bit of time, right? And you're not going to have everything like the projected range for every day and things like that, but you can make assumptions after a while. After going through several of these, you can start to make assumptions, and you can leave that one piece of the information out too. Focus on the things like where's settlement, stuff like that. So, go to your chart at 5:30 in the morning and say, what would I be deciding about this? And if you will do that and do about 50 or 100 of them, which sounds like an awful lot of work, and I assure you it is. But if you will, what you'll notice is every time that you get done with one, you'll go, well, that day ended up really breaking out. Or that day ended up really breaking down. Or wow, that day really didn't trade very, very well. Or that's a day where I managed to get all the targets. Or that's a day where it really didn't unfold the way that I thought, right? And you ought to be able to classify those into maybe 5 different things, right? This is what happened after a day where it really broke out. This is what happened after a day where there was almost no trading. Here's, these are ones that I was very good with. These are ones I was very bad with, right? So let's call it 4 folders. And you take these 100 charts and you take a snapshot of them and you put them into those folders, right? And then you have something to go back and review. He's telling me that it's a high percentage day that it's going to consolidate. Well, I remember doing some analysis on days like that, right? You build yourself a Rolodex, more or less, of things that you can go back and reference. And by doing that work, this becomes something that's very easy to do. We have people that come in here and they go, I don't understand how in the world you came up with the low of the day or the high of the day. Guess what? We do it all the time. All the time. It's not that hard. Okay? All the stuff that we just talked about for morning analysis, keep it simple, stupid. Right? The KISS theory. There's not much to it. And we're going to go through it right now. Yeah, Mike, I have a feeling it won't happen. Believe me, I sat here earlier thinking whether or not I was going to make that same offer. But I bet you money that Monday I get 15 and Tuesday I get 2. And like I said, what you'll get out of me is how much you put in. And I don't mean overwhelm me with a bunch of stuff. I just mean be consistent. Do it for 5 days in a row. Prove to me that you're really going to do it. And you will get a lot of feedback from me. But most people don't make it past day 2. And, whatever, you're not going to hurt my feelings. I just want you to know that the offer is there. All right, so let's take a look. So, if you can't see everything, there's a little button up on the top of your window that should say fit to screen or something like that. This is a big chart. I didn't mean for it to be that big. This is this morning at 5:30 in the morning. All right. That's what we're looking at this morning. Now, the data that I have for this morning was that there was a 62% chance of consolidation and that we have an expected range of about 8 points. Okay? So other than that, where do I start? Right? What am I going to start with? Well, we just went through this. First thing I want to do is locate the previous day's settlement. All right? Now, you can go to the CME. Somebody will be nice here and post a link for you, I'm sure. You can go to the CME and they will tell you what the settlement is every day, or you can just use your charts or whatever. If you look at, I'm not going to switch this chart because I'll lose the fact that I backed it up here. But if you look at a regular, 24-hour chart or something, say a 15-minute chart, you'll be able to see, at least on eSignal, you can see exactly where the settlement tick is after the close. So I'll give you an example of that later on. But for the purposes of this discussion, I know what settlement is, and it's 37.50 yesterday. So I'm going to go in, and I'm going to mark that off. Okay. Now you certainly don't have to draw lines all over your chart. This is my process. It doesn't need to be yours. But write it down. Be aware of what settlement is, because obviously we're going to make some assumptions about things based on that. The next thing that I want to do is locate the high and the low of the previous day. This is the previous day's high. This is the previous day's low. Give me a sense of where we traded, right? All right, well, that's yesterday. This is what we traded yesterday. 27 to 39, 38.75. Okay. So I can see that, and then if I go to my web page for logging into the room, or I look at the software, I can come up and say, well, and on top of that, within here was an area where the majority of trade took place that came in from, 38.25 to about 31.75. That's where the majority of trade took place yesterday. Okay? And we know that, after, this is where we opened. We opened, we upticked, we came down, back down to the low. Remember, we had a nice short all through this, got a big signal here, and then it carried all the way back up and through and back and forth, slowly making bigger highs yesterday. Okay, so a lot of trade took place all in this 33, 36 area. All right. Well, what else can I look at here and get some sense about? All right, because that doesn't tell me a whole lot right now about anything other than basically in the overnight we went up and made a little bit higher high than where we traded yesterday. So we're basically trading at this point in time right on top of the upper edge of value. So, you know, bouncing back and forth off a settlement. I know that if we open up more than about 2 points from settlement, that usually we'll backtrack to it. But if we open up on top of settlement, then we're usually going to be sitting there for a while, right? Not anything too exciting. So right now I'm trading maybe a point and a half or a little bit, you know, off of here, right? That's, you know, so okay. Well, it's not going to tell me a whole lot at this point. So what I need to do is I need to go in and think about where we traded versus where we've been trading, etc. Right? What are the key transition points that have taken place in this market? And I would say most notably, we could say that at yesterday's low, we had responsive buying. We all saw it, right? Even had a nice big fat green signal down there. Now you may say, well, DB, why am I interested in this low and I'm not interested in the low of the day? Okay. Well, in this particular instance, this low comes in at 3:30 in the morning. Okay, 3:30 in the morning we make a low, and while I'm sure that was a big beautiful low and somebody made some money, my real concern is the fact that when we retested that in the bulk of trade at 8:30 in the morning, we saw a huge responsive buyer come in. Right? So it's not to discount one or the other. They're both really close to each other, but that's the one that I recognize because I watched it happen and I know it happened where the bulk of trade came in, right? Now Brad's put up something else that's very interesting here. If we think about what took place in the morning. In the morning we essentially opened here and we upticked. And then we we upticked back up to settlement. This was where we shorted, right? And then we had the sellers come in and drive the market down and the responsive buyer. So we basically had a range going on here, right? We basically had a pretty strong range. And if we think about what took place in the overnight and the previous day's trading here, we always held above 31, right? And then in the overnight, we traded below 31. And then in the overnight, we held 31. And then in the morning, we saw sellers initiate trade through 31. Okay, well, if all that took place, then couldn't we say here that we know that the buyer initiated trade to get us back up through that and start the range expansion? In fact, we were looking for this to come back down into these levels yesterday, weren't we? Myself a reference point here. Okay, and then overall on the range, for several days now we've been trading a range, right? This big range here. But yesterday at the close, after making several highs and seeing some responsive selling, right? Then eventually we have the buyer initiate enough trade to drive it up just a little bit higher, right, for the close. So we know that there was a buyer that came in to take out this range here, and we can, also recognize the fact that all of the overnight trading's been held up by that, hasn't it? And it's very interesting that my pen is not drawing on the room. I'm sorry, I'm actually drawing on my screen thinking that it's showing up on yours, but it's not. I don't know why. Anyways, I apologize for that. Nothing I can do about it. But basically what I'm looking for here is the buyers that have initiated trade through the top. Right? And I know that there was a responsive seller here. Although more or less at the close, but you know, that's where the market stopped. Okay, so I've got a lot of information here already. I mean, to me, this is the makings of a pretty good, you know, this is starting to work for me. All right, because I know that I'm basically expecting an 8-point range, and I know where the market's traded so far. All right. So I could say if I'm looking for an 8-point range and we currently hold what we've traded, an 8-point range is going to put me from the current low up around 45, and from the current high, an 8-point low is going to put me right around 31. Interesting. Okay? Well, I don't know much about this up here, but I do know a lot about this. This is where I'm telling myself that I have buyers initiating trade through a range, and I've got a range estimation here. Looks kind of important to me. Actually, we'll make that one green. That's what we're expecting for the low. All right, so what else can we look at? Well, we know that we've got the responsive buyer down here. Okay, so we've got a little bit of a spread here, so we could say we'd be looking for any sort of responsive buying effort from 31. Oops. Or we'd be looking for the sellers to initiate trade, but we'd want to be cautious about this because we know the responsive buyer came in here and that the sellers initiated a lot of trade through this around 28, right? So this is going to be a very difficult area. What I'm telling you is I'd love to get short coming through this, but I'm very aware that anytime we stab down into this, we could be finding more responsive buying. So this is going to be a very difficult area for me. And I just want to note that somewhere. You know? I just want to note that somewhere. All right? So I've got a sense about what I want to do here, and I know that basically I'm looking at the potential for a breakdown beyond this. You know, but where? What if I'm not right about 31, and what if it doesn't hold at 27? Right? I need to go back and look and see what's taken place because all I'm looking at right now is 2 days. Right? I have a sense of this being a good range, but I mean, why don't I really look at it? Right? What else can I see that's taken place? Huh. Okay. Well, magically I have all these other annotations on my chart. Why do you think that is? Because I do this every day, right? This is my process. So every day I'm annotating my chart and I'm coming up with my, you know, what do I see and what's taken place? We have this great big range that we've been trading, you know, and so if I only pay attention to 27 like it's the end of the world, is that, you know, this is going to be a hard road to get through the lows, right? This will be hard because if we start trading below the 31, we want to get short, but we know it's going to be tough if we come down into the 27s, 28s. But if we break the 27s, can we say, yeah, but then we're going to short. Then we're going to short. Well, to where? You know, we have to be very aware of this entire area here. And this is going to be very difficult trading for us from about what? Oh, well, we've got buyers initiating trade all the way back there. So let's say from about 24.5 up to about 28.5. I just need to be aware that that's going to be difficult for me. You know how nice it is to know that in advance so that I don't get so anxious that I start putting myself into lousy stuff? It doesn't mean I can't take a trade there. It just means, hey, pay attention. There's like 4 points where this could be really hard. You know, it could be a hard read. So don't set yourself up for, you know, for finding finding yourself in the mix of something and going, God, why won't the market move? I mean, we could literally trade down into that range and have a whole bunch of people going long and a whole bunch of people going short. You know? So if I think about that in terms of strategy for me, wouldn't you rather be short and being worried about where your profit target's going to be rather than trying to get long and worrying whether or not you're at the bottom of something? Would you agree or disagree with that? And it may be different for everybody. This is not a trick question. I mean, for me, if I know what I know about this, and let's go ahead and mark off some other stuff so we don't have to come back here. All right, I've got buyers initiating trade down around 19. Okay, and other than that, this is basically what happened, right at the new year. So I've got a couple of things here that I want to pay attention to. That's setting myself up for a huge range already, right? So let's think about this. If I know that this is going to be a difficult area for me, and really my target is here at 31, just based on the fact that I don't have a bigger expectation than that, what I'm probably looking to do in terms of strategy is probably that I want to really be looking for a great short here. Right? Just tell myself, don't get overly worked up about trying to buy the lows here. All right? Don't get overly worked up about trying to buy down here. Even if you see great stuff, get focused on, if 31 gets taken out, how do I get short? Because what I'd like to do is get short and be worried about trading down into this, whether or not I can hold it through it, right? Rather than do I buy here? Do I buy here? Do I buy here? I'm going to have a really hard time putting a stop anywhere logically. Remember, we talked about logical stops. If I know that I've got responsive buying at basically every 1 point spread, from here to here, from here to here, it's going to be a mess. Chart's having a little hard time keeping up with me, so I'll move a little slower here. I apologize. Maybe it's not going to keep up with me at all. There we go. Okay. All right, so what I've done is I've given myself just some kind of basics here, where I know that I've got a trouble zone, I know I've got an overall target, right? And now I need to start thinking about, well, what about the short term? What about the short term? Because I'm going to have to deal with the open, right? So if this is my big picture and my bigger picture for the day, then I want to start thinking about smaller picture here. Okay, I know that we had the buyers initiating trade around 36. Come on. Computer failure here. Around 36. And I know that the highs are right around 39. Okay? So I can come up with a game plan there, at the open, where we've seen the responsive seller and we've seen London not trade through it, and we saw the buyer initiate trade the day before. Right? So I can give myself that. All right, so that's about all I can do right now. I mean, I've done a lot of work here. The only thing I can do now is compare that to the technicals that I've got. Okay? So I want to go and I want to look at my pivots. What lines up here? Okay, well, the first thing that I notice is that I have a pivot at 31. So I like that. How about we put a check mark next to that? Hey, good job. I did a good job. Let's focus on that one. That sounds great. All right. I don't have a pivot anywhere near the bottom of this thing. Maybe 2850 I've got one. Okay, 2850. And then I've got one down at about 2450. Oh, and look, that's right where I marked off too. Okay, and that's dumb luck. I didn't do that on purpose. So both of these are actually pivots. All right. So what I can say is that I know I'm worried about this whole area, and my strategy here, if we break down, was to try and short into some targets and not try and get long. So at least I've got some technical levels that sort of blend with that, but they're not really. I know better than to screw around down here, right? Okay, so what else have I got? I've got a pivot all the way down at 18, and I was looking at about 1950 where the buyers initiated trade, so I'll leave that one alone. 18, 1950, a point and a half apart's a little bit too much for me. I'm not going to pay attention to that. All right, so what about my stuff that's close by? My stuff that's close by, 39, that's the pivot just outside the value area. Okay, I like that. And I have a pivot at 35, not 36, but I know where the buyer initiated trade because I know where the range was. We could kind of call this either way, but I'm not really going to be that concerned with a 35 pivot. I guess we maybe had some responsive buying here. I've got a question here. Don't those previous responsive buys at 24, 25, 26 support the decision that there would be responsive buying there again on a retest? Yes. Yes, they absolutely do, Eric. But my problem is, what I'm trying to teach you is how to have logical risk to reward. Okay? So what's the very first thing that you do when you determine you want to look at putting on a trade? What's step one? Class from day 3, what's step 1? Steve's got it. First thing I have to do is locate a stop. So let's go into a theoretical here. Let's say that we trade down here and we do see responsive buying come in at 28. Where's your stop? Where's my stop? Below 28? I'm going to put a stop on the low of the day. Probably not. Okay, well, if I want to get my stop below the low of the day, and I put it, let's say, in the 26s, okay, well, this was at 1 o'clock in the afternoon. The last time we came down here, we had responsive buying. I don't know. Do I really want to have a stop right where there was responsive buying? Probably not. Why don't I move it down below 26? Oh, hold on a second. The 9 o'clock low 2 days ago was at 25. Huh. Okay. Wait a minute. 24.50. Why did I mark that off? Oh, that's where the buyers initiated trade to break into this new range. Huh. So, I know that the sellers are going to have to initiate trade to get through 31 because that's where the buyers initiated trade. So my target from 28 should be somewhere around 31, right? So I've got a 3-point target, and let's be smart about it and say that I'm probably not going to see 3 points, more like 2.5 points, right? And now I've just established that because I want to take a buy here, because I see responsive buying from before, that I need a 1, 2, 3, 4-point stop. Are you understanding a little bit here? I'm obviously being a little smart alecky about it. That's why I said this is going to be a very difficult area for us, right? Because how do I manage a trade from here? How in the world would I manage a trade from here? I can't, right? So I'm not even going to think about it. No matter what I do, it'll hurt me. If maybe I make some money, but is it worth the risk? Yeah, Mike, it's at 26, it's at 25, it's at 27, it's everywhere. What am I going to do? I'm not going to mess with that, guys. I mean, what we want to do is find the best opportunities. And what are we stating here anyways? We've come up with all of this analysis and we've said, we think that this is going to be the low of the day. Okay, so we're talking about something that's secondary. So after the market breaks out beyond where we would have an expectation of the range, then we're going to start buying against it? I don't think so. I don't think so. So you just need to be logical about it and say, yeah, there's a lot here, and that's going to be hard. And rather than set myself up for something hard, I'm going to say, hey, don't trade there. Just let it go. It's all right. It's all right. Let it go there. We don't have to get everything. All right, so hopefully that addresses that. The reason I've marked off stuff close by is because we're going to have to deal with the opening range, right? We're going to have to make decisions at the open. And right now, this is in between where we are. And, I'm going to be looking probably for responsive buying or buyers initiating trade at 39, and somewhere 35, 36, probably looking at the same thing. Is there responsive buying or are the sellers initiating trade? And I'm going to pay attention because this is 5 o'clock in the morning. I'm going to pay attention to what happens in the pre-market, right? What all takes place here, how far away we open from settlement. Those are the things that I'm going to be focused on, and we'll spend some time with that in a minute. But if we break out of 39, I've already said, well, the range, if we don't make a new low, if we break out of this, the range ought to be about 8 points. And if I'm looking at my pivots, what do I have up here? I've got a 45.50. Okay, technical level that doesn't make a whole lot of sense. We haven't traded up here, but yet I have a range estimation that's 3 ticks away from that. Is that good enough for me? You bet it is. Because this is what I'm expecting the range to do, and I've got a technical level up there that mathematically is being developed for me. So yeah, now am I going to look at this as someplace that I need to short just because of that? No, but would I pay attention to responsive selling there? Sure. And more importantly, my objective is to be long from here, guys. My objective is to be long from the 39. So what I want to do is I don't think the chart's keeping up with me here. There we go. I need to get off this screen. We're having a little bit too much work. Okay, so there's my basics for my morning analysis for this morning, right? That's essentially what I'm looking for. Okay, so now let's step away from what happened and all of that, and let's focus on how our strategy continues here. How does our strategy continue? We've just gone through what took us, maybe 30 minutes? Okay? And that's because I'm walking through every single bit of it. The first time you do it, it might take you a half hour. After you do 5 of these, it's going to take you 15 minutes. Why? Because your chart's already going to be annotated. Right? You're already going to have a sense of where a lot of stuff is, and it's going to get very easy. Very easy. Yeah, short from there also, Brad. I mean, the idea of looking for sellers initiating trade, but I got to get off this computer because it's about to crash. The thing's really lagging. So we'll come back to it in a minute. I'm going to stop the projection, go back to the slides. Okay, so that's our morning analysis. That's the process we just walked through today, and we'll take a look at how all that comes together. But the next thing that we need to do is we've got to get ourselves focused. Because in an hour or however long before the bell you do your morning analysis, you're going to have the open. Okay? And the open is where we have the majority of trade the majority of traders, the majority of commercial traders, actively pushing it into the market. Okay? Typically, I mean, the exception is when we see that we're opening up on settlement. Typically, it's the only time I would say that the market chops. Okay? We end up just trading back and forth quite a bit and nobody really taking control. And we talked about that yesterday. When we see the market is opening a couple of points from settlement, usually not expecting anything but some slow trade, 3 to 6 points away from settlement, we're almost dead set on the fact that we're going to come back to settlement. And when we're 10 points or more, we just assume that we're not coming back to settlement, right? Breakout or breakdown. Okay, so if I know where settlement is, that's going to help me with how I'm going to address the open. Okay. The other thing is that if I've done my morning analysis, I probably have some logical targets that are close by, right? In this case, we came up with 36 and 39. Then what I want to do is forget about everything that I see pre-market. Don't worry about looking back at the periods right before you and all of that stuff. Because the minute that the cash market opens, what we're going to see are a lot of orders coming into the market. Okay? And I'm just going to give you some typical scenarios. I'm going to step away from the idea that we're opening up right on settlement and we're going to chop around. For the most part, we're going to see a lot of orders come in right at the open. And somebody will either take control or get stuck really quickly. And the difference between the open and any other portion of the day is that it's almost exclusively commercial traders. Retail traders like to let the market open, trade for about half an hour, get a sense or a feel for direction. Are we going to retest the high, the low, right? The first couple of minutes are usually not engaged by the retail trader in a typical sense. And I'm stereotyping, but I mean that's just the way that it is. Okay, so we see huge amounts of trade come in. And retail and commercial traders trading the open do not trade it the same way. And I only know this because I know some. They do not trade the same way that they do putting on positions where they're willing to take larger drawdowns. The open is about trying to drive direction and trying to drive it early. So whereas we may expect a retail trader to get stopped out at 2 points, commercial traders that are trying to drive the open will not get upside down more than a few ticks. They'll come in strong trying to drive the market lower. If they're unable to do it because there's too much demand, they will get out of their positions immediately. Okay. I just know this from experience. So we have to approach it differently. Okay? We have to approach it differently. And I'm talking about the first 5 minutes of trade. We have to look at that as it's its own day, it's its own period, it's its own market. Okay? Because what happens in those first few minutes compared to the rest of the first hour are two totally different animals. So we want to follow the order flow immediately from the beginning, from the open. We want to see who gets trapped early, who's initiating trade early, where are they getting trapped from, where are they initiating trade from. Okay? We only have to try and assume where the market is trying to go and how good of a job it's doing getting there. All right? So if we've come up with 36 and 39 as some close by boundaries, how good of a job are we doing getting to either one? Are we able to trade through either one? Right? Are the traders coming in with force and driving the market? And the order flow shows you that very, very, very quickly. Okay? It takes a little bit of practice. It takes a lot of practice. The open is a great time to make money. But if you can't shift mentality from how you would trade, responsive buying or responsive selling, or buyers initiating trade, sellers initiating trade at 9 o'clock, when we're up against some larger target area that we've been looking at, and the open, you just have to separate yourself. Completely different. You have to make quick decisions, and you can't let yourself get upside down very much. Think of it the exact same way. If I tell you that a commercial trader is not willing to get upside down by more than a couple of ticks, essentially they will try and drive the market lower, and it's not, okay, well now I'm just going to stop trading if it doesn't work out. They'll reverse. Okay? They're going to try and drive the market one way or the other very early and get on the right side of it very early. Okay? And notice what's happened for the last few months. Massive trade in the morning for 30 minutes, and then the market moves in a sideways channel for hours. Right? It's happening an awful lot. So the advantage of engaging the opening range is huge, but you have to be prepared for it, and you have to be ready to make fast decisions. Okay? You just can't let yourself get married to any one idea. It's all about seeing who's getting trapped, seeing them get trapped. And what I mean by that is, do we see a tremendous amount of trade trying to drive the market lower, but they're unable to? You know? Do we see a commitment of traders coming in on the other side? Think of your picture-perfect periods that we showed you on Tuesday, and shrink those down into 5 ticks. Watch the trade coming in. Is it coming in at the bid? Is it coming in at the ask? Who's having the most trouble here? And they will flip, and they'll flip early. Okay? So when I'm looking at the opening range, there are a few things that I really look for. Okay? I assume that we're going to have an opening tick somewhere, and every morning I call out what the opening tick is. All right? From that, we will create some sort of mini range within 3 or 4 minutes. Okay? Either the buyer will come in, push the market up, and the seller will drive it back down. Okay? And the seller might get stuck and bring it back in. All right? Very often, this is what you see, where it goes one direction, then the other direction, and then back in. Okay? And it could be the exact inverse of this, so there's nothing wrong with looking at it that way, where the seller comes in, buyer comes in. Okay? Now, if you imagine what that looks like on a 30-second chart or a 1-minute chart or something, you know, you've got moves up, moves down, moves up, whatever. Okay? The idea is that I want you to think about what the price action's doing. It's moved up, it's moved down, it's back in the middle of that range. So every morning you'll hear me talking about the opening range. Okay? So far the opening range is 1.25 points. So far the opening range is 2 points. We're trading back to the top of the opening range. We're breaking out of the opening range. Okay? I'm making decisions about what I'm going to do at the open because this is what I see. I see how we're reacting to that. So it may simply be that we have the opening tick, we trade higher, the buyers get brought back down a little bit, and the buyers initiate trade. Okay? So what I would see is that the buyers have come in, there's slight responsive selling that gives way to buyers initiating trade. This can happen in less than 2 points. Okay? So what is my focus if this is what I see? Right? I'm going to get long when I see that these buyers take out that opening range. All right? Or the opposite of that, where a seller comes in, drives the market down, gets hung up a little bit, and then the seller initiates trade. I'm looking for them to come back into this and come back in quickly for a short. Okay? In just the first couple of minutes, I've got to be able to interpret that. So I'm not going to have big periods to work with. I'm not going to have big patterns. I have to be able to interpret what's going on with the numbers that are coming into the chart. Okay? Now, that's one scenario. The other scenario would be what I first showed you, which is more like a big whip. Okay? Let's talk about what would happen here. We'd start out by having the buyer come in, and then the responsive seller saying nope. Okay, but how do we get back through this buyer? We'd have to have sellers initiate trade, right? And if they get hung up at all, well, we have responsive buying. What happens when we return to where the seller initiated trade? Right? Opposite of that would be when the seller comes in, drives the market down, buyer comes back. So if we have the seller come in and a responsive buyer hold this up, then we would probably see buyers initiate trade to get back through those initial sellers, right? And if we get held up, we've got some sort of responsive selling that's going on here. What happens when we return to where the buyers initiated trade? It's where I'm looking to get long. Okay? A lot of times in the morning you'll hear people talking about the slipper. Okay? Opening tick. That's what we're looking at when we're talking about a slipper. Yeah, and you want to do it quickly. You want to be you want to be with those in control. You don't want to be looking at the open as an opportunity to to be against the momentum. All right? And the exception would be like yesterday, where the momentum is up, right? And we're looking to get long, but what takes place? Then we see this double top come in with the responsive seller. Okay, so we have two shots at the market trying to move up, and we get a nice breakdown. And that's why we sold against what appeared to be the early strength yesterday. But for the most part, I'm looking to get with the overall direction, and I want to do it quickly. Okay? Just keep in mind when you're talking about the opening range that it's not exactly the same way that you're going to approach trading the rest of the morning. Because the rest of the morning you're looking at bigger targets, and you can compare where we've started from to where we've gone. How much of our range have we already absorbed? You know, if we're looking for this thing to break out of 39 and trade up to 45.50, how far along are we in that? Right? I'm just talking about engaging the first few minutes of the market. It happens in a very tight pattern, and you'll get really good at it. You know, you'll get really good at it. So, if we go back to our first few minutes, Jim, just the first few minutes. I can't give you a fixed time, but I mean, we'll see it from the first 3 minutes to the first 10 minutes. Yeah, on double tops, we'd expect there to be lighter volume the second time. Yeah, not the first 30 minutes. Don't think of it like what they what do market profile people call that? The initial balance. Yeah. These days, trading's over after the first 30 minutes sometimes. So if I wait 30 minutes to try and get my head around something, I'm probably missing everything. And that's not for every day, but certainly happens a lot. Okay, so hopefully the computer is not dead yet. We'll see. Okay. So, if this is and I obviously was not here this morning, so I don't really know how it all came together, but if this is our assumption about the open and about the opening range, that we're looking at 39, depending on where we open. Looking at 39 and 36 to kind of give us some basic boundaries. Depending on where we open, if this is at 5 o'clock in the morning, we want to know how far away from settlement we are. This is 6:30 in the morning. We start driving down to where the buyers initiated trade the day forward. Then we trade all the way back up to the highs. This is at 7 o'clock in the morning. Ooh, We have a 7:30 report, I guess. Yeah, today would have been unemployment. Is that correct? So this is still pre-market. Wow. Where did that go? So it looks like pre-market we tried to trade down into this 36 level, and looks like there was some responsive buying there, right? Took it all the way back up to the top, responsive selling there. Then we trade down, and in the report, obviously, take out the 36 and trade right down to our target, don't we? Now, you can sit here and say, well, you already knew that that happened and all that's all good and well, but I didn't know that last night when we did the pivots, and sure enough, the 31 is the pivot. This is where the buyers initiated trade. So, interesting. That is the low. Okay. So then we come back up. Where do we come back up to? The next half hour we trade right back up to 36, right? So that would tell us that in this process, what? We saw the seller initiate trade through the report, and we saw the responsive buyer come in at the low. Come on. And it looks like when we trade right back up into the 36, it looks like there's some responsive selling that goes on. What happens next? Another jab up into it and really back into where the responsive buying was pre-market. This is the open though, right? This is the 8:30 open. Okay, so we open at what, 34.50? We trade back down to the lows, and then we start trading back up where? Pretty close to settlement, huh? Trade to settlement in the next 30 minutes. So if our first rule is to go and find settlement, and then we say how far from settlement do we open? If we open at 34.5, I'm sorry, we opened at 34. No, 34.5. 37.5 is 3 points away, right? Between 3 and 6 points, we're almost always going to come back to settlement. Trade off of settlement for a couple of points. Back to settlement, and then it looks like that's where all of our magics happened, right? So, all in all, would you say that our morning analysis was fairly effective? I mean, I don't know that everybody traded this because of the report or anything else. But does it make sense? I mean, forget about the outcome and, well, I didn't get to trade the report and all of that. Does the process make sense logically to you? Do you feel that there's merit in trying to simply interpret the chart structure? Is there merit in that? Getting a lot of yeses. Good. I'm glad. You know, I don't ever ask you to bite off onto anything and just believe me. You know, I don't want you to just believe me. Don't take my word for it. I want to know that this logically, when you see a day unfold for you, when you see a day unfold, and you've just taken all this time of going through and thinking about it and hearing some rules and some things that, these are the kind of things that we want to look for. I really want that to hit something with you and say, you know what? That's the most logical approach I've ever seen to a trading day. It all makes perfect sense to me, and I like it. And if we're there, then we've done a really good job this week, in my opinion. And if we're not, you got to tell me so that we can figure out where we've missed a step. Where did we go wrong? Yeah, because it's not mysterious. You now know how the market works. You understand the dynamics of the auction. And you can look at the big picture and say, you know what? I bet I can do this. I mean, how many of you right now are saying, I bet I can do that? I hope all of you. You may be a little apprehensive and say, yeah, I don't know, but yeah, I could, hey, practice. You're going to have to do some work. You're going to have to do this more than once. It's not good enough to have me come in and show you what I'm looking at in the morning. I want you to do it before I ever show you anything. And then you say, okay, well, you have 31, I have 30. Can you explain the difference here? Why are you looking at this? Why am I looking at that? That's how we learn. That's how we grow. Okay? Big piece of your day. When you have a picture like this and you can watch it unfold, it's totally different. You know what you have to do. Okay? And so what I suggest is that whether you use lines and little arrows and things like that on your chart, or if you keep a notebook in front of you and write things down, after you do your morning analysis, I want you to write out objectives. My objectives are this. Based on what I see, I'm going to be looking for responsive selling or buyers initiating trade at 39. Okay? I've just given myself something that I'm telling myself what I need to do. Okay? Based on my analysis, I'm looking for responsive buying or sellers initiating trade at 36. That ought to carry us down at least to the 31, which is my overall range target for the day. What does that mean other than that's where I'm expecting the market to run out? Okay, that means that if it exceeds that, then my interpretation of the day needs to be adjusted, correct? So it's not just some arbitrary number out there. I'm saying from where we are right now, that ought to be the low of the day. Okay, so if that's exceeded, then I need to be thinking, hey, it's going further and I'm about to trade into a war zone down below. So I either get short now or I walk away because I'm not trading in the middle of all that stuff down below us. Right? So write it out. Have some objectives or put it on your chart. One of the reasons that I refuse to switch from eSignal is because I've been doing this process for so many years that I like the way that it does it. I like to be able to scroll around the chart and move things and make them bigger and smaller, and I'm used to it. So I'm happy to pay whatever I have to pay for this monthly because it makes my life in the morning really easy. Now, I'm not saying go out and get eSignal. I'm just saying, be comfortable with your charting platform, and if that's what you're using to annotate your chart, then make sure you can do it effectively so that you can read it, so that you know what to do. Or print the screen and draw on it with magic marker. One or the other. Okay, so what do these two things equal so far? That we've got some sort of a strategy that we're building for the day, right? You starting to get that step by step. I come in, I do my morning analysis, then I engage the market at the opening range. Now I need to kind of think about what I'm going to do for the rest of the day, right? So I need to be aware of critical times of day during the day. Obviously, 7:30 in the morning, we're almost always going to have an economic report. So if you're trading pre-market, that's the time to pay attention. It's when you're going to see the most activity. The opening range, obviously, at 8:30. Usually we will have a 9 o'clock economic report. 9 o'clock will usually be right when we find out whether or not we're breaking out, breaking down, or reversing, or holding in a range. And the first 30 minutes we can usually make pretty big assumptions because we almost always see, if there's going to be a reversal, we almost always see it at 9. If not, we'll see it at 9:15 or 9:30. Okay? So usually within the first hour we can come up and say, feel pretty good about our analysis, or we need to make some adjustments, right? Because if you put in a new high or low, obviously your range estimation is going to be different. A lot of things are going to be different. I do see the questions on the board, and I'm going to address them at the end of this, okay? I don't want you to think that your question's not going to be answered. Then, after we've traded the first hour, we need to adjust our entire mentality about trading. Okay? Go back to your analysis from the morning and say, okay, that's how the first hour came together. What else am I looking for? Can I still say that the same levels are my levels? Have we destroyed my idea of the day, holding in the range? Is it totally different? How far have we traded? If I'm expecting a 10-point range in the first hour, but my daily analysis told me it was going to be an 8-point range, can I replace that one with the other? Yes. Have we already traded that? Yes. Okay, so what do I expect for the rest of the day? Well, probably not much, right? If I tell you that we're going to have an 8-point range today, and it comes true, And you look at it and you go, not only did it come true, but we knew the high and the low before it came true. Okay, so am I expecting now to be able to trade for big trades? Or am I going to accept the fate of the 62% chance of consolidation and the 8-point range and look at it and say, okay, if I'm going to engage the market from this point forward, if it's going to continue to do this, then I'm going to be looking at taking very small trades, right? Probably. Okay, so adjust your strategy. Adjust your strategy. Think about what's taken place, and you're not going to swing for the fences every time. In the morning, you're looking for that great trade to come together so that you can make use of all of this analysis. And beyond that point, you're looking for opportunity. And that opportunity is going to be dictated by what's in front of you and what your expectations are. Okay? So usually from 9:30 to 11, we'll get a sense that either we're going to see a continuation or further breakout of the range or something like that, or continuation in the overall direction, continuation to our overall daily target, okay? Or we're going to see a reversal's developed. And we want to use the knowledge of what's happened in this morning, meaning looking at the range, okay, well, the previous low was 31. What if we trade back to 31? Okay, things like that. Start adjusting your morning analysis to exist with what's taken place in the first hour of trading. Go back in, mark it off, responsive buying, sellers initiated trade. What happened? Annotate your chart. Obviously, at lunch, we almost always see range trading. Yesterday, I told you we average about 6 points at lunch. Obviously, on an 8-point day, we're not going to average 6 points, but for the most part, it's going to be slow. You see me check out every day at 11 o'clock. I have no desire to sit here. There's too much life in life to sit in front of my computer and watch paint dry. Okay? So get up and go do something. Make sure you feed yourself. Do something active. Take a walk. Don't become a sloth trader that just sits in a chair staring at a screen. Do something to put a smile on your face. In the afternoon, we usually would expect another influx of volume that will either firm up the range that we've created or allow potentially for a continuation. Under most circumstances, I would tell you that comes in at 1 o'clock and that we'll have a good stretch of trading from 1 to about 2 o'clock. However, the way that it's been recently, and basically starting in about maybe about July of last year, is that we're not seeing anything in the afternoon. No continuations. Whatever ranges we've created end up solidifying. I mean, we're doing it right now. And if we do see anything, it'll be a pretty hard charge of stuff from about 2:30 to 2:45. And almost always, if I see a trade, if I see something, a target that we came up with in the middle of the day or something, you will see me take it, and I'll take it for a point and a half, 2 points max. It's like, that's how I put icing on the cake at the end of the day. I don't have any expectations at the end of the day that I'm going to, have some fantastic, phenomenal trade. But they're usually pretty high probability trades. They're just small. So, put that into your strategy. And you don't have to have the same strategy I do. You could obviously, come into this and say, well, what really makes sense to me is the responsive aspect of it. I know that we're going to rotate off, 6 or so ticks, so I'm willing to just put myself into the mode of a scalper. You got a lot of traders who do that, and they do very, very well. And very well. I have a hard time letting go of trades. I have a hard time having a fixed flat stop. So it's very difficult for me to scalp. To me, I'm always too into what's going on in the print. So I can't have profit targets that small. I get upside down and I can't get to a point where it's profitable for me. But there are a lot of people who do just that. So you don't necessarily have to do everything that I do. You can have variations of all of it. But you have to put this together for yourself. Okay? You've learned a lot here. A lot. There's a lot of information that's been placed in front of you and hopefully absorbed. And I don't expect that you absorb it all the first time. That's why we want you to sit in as a guest, or a veteran student here in 2 weeks when we do this all over again. Let me address that again at the end of this. Let's try and get through this and stay on point here, and then we'll discuss stuff like that. Okay. All right. So when we step away from this boot camp environment, what do we do? How do we make this the most effective thing for you? All right. This is the plan that I'm going to lay out in front of you. You can choose to follow it and grow with it or not. All right? It's up to you. I'm not going to tell you what you need to do, and I'm not going to, tell you to take a trade, and I'm not going to tell you how much money that you need to put in your account and all these things. All right? But I'll help you through all of it. All right? My suggestion, the success that I've really seen here, and the people that, there are people that are in here that have been in here for 5 years. There are also a lot of people who are very successful at this who cannot stand to be in the trading room. They hate when they're looking at something and somebody posts something else, like they're looking for a buy at a level and somebody's like, well, I'm going short here. Oh man, it'll just, some people can't work through that environment. But I still talk to a lot of very successful traders that have done this. And the commonality, the common thread between them is the process that they went through comprehending this and setting themselves forward from graduation day here, right? My suggestion is that we go through this in this fashion. You think a lot about it this weekend. Spend some time writing some stuff down and thinking to yourself what you're really willing to put into this. What are your real expectations? What are your real goals? If you've been a trader for the last 12 years and you're doing okay and you're just trying to get over the hump, okay, well, typically what that means to me is there's got to be some sort of dollar value out there that you're looking to get to, right? And I hate to equate everything to money, but come on, guys, this is what we do for a living. So what is that number? What is it that's going to mean to you that you've been successful at this? All right? And I don't want to hear stuff like as much as I can. That's not good enough. That's not a goal. That's not a goal at all. All right? If you're working a job right now that you hate and you're doing this because you want a better life, what's it going to take to replace your salary? What is it going to take? What's the dollar value? Okay? And if you can get there and you can be realistic and say, I may not be able to get man, I don't know how you do it, Bob. I can't stand that kind of stuff. I've been through a couple of them in Costa Rica, and no way. No earthquakes for me. Let's be realistic. Don't come to me and say I want to make $1 million next month. Or I have a $2,000 account and I need to make $30,000 a month. Come on. If that's the case, then we need to figure out how to get you from a $2,000 account to a $10,000 account to a point where you can start to even make enough to have enough to trade for $30,000 a month, right? So think about the real goal here, and I'll tell you how we're going to get you there. And I do this with everybody, and people go, yeah, whatever. But the guys that have been through this and set up benchmarks for themselves will tell you it's the only way that they're still here today. Because the reality is it's not very hard to make an awful lot of money doing this. But you have to have the right strategy. It can't be, you can't approach trading the same way with a $2,000 account that you can a $2,000 versus $10,000 account, or even larger than that. It's totally different. You can put yourself into a situation where, I mean, if I show you that you can do this consistently, day after day after day with 2 contracts, is it going to be any different for you to do it with 4 contracts or 6 contracts? No. Once you have the consistency, you have the confidence. And then it really doesn't matter. And everybody has their limitations. I used to trade a lot more than I do now, but, you know, I have a family and I have too much to enjoy in life. I can't be strung out all the time. And I know where my limits are. When, you know, it doesn't matter that I'm doing everything exactly the same. When I put on a trade and every tick costs $1,000, it terrifies me. So, you know, spend some time this weekend thinking about what your real, honest goals are. You can lie to whoever you want, but if you lie to yourself, we're not going to get anywhere. Okay? Come up with some honest, real goals and real things that you're looking to get out of trading. Where do you want to be in 6 months? Where do you want to be in 3 months? Where do you want to be in a year? So, you know, come up with a dollar number for, in 3 years, what you expect to be making every year trading. I'll get you there. I promise I will. How we do that is you have to start out with some goals so that we can break it down into a smaller, manageable plan. All right? I'm not a big fan of simulated trading. I think that people make big mistakes when they go into an environment and they simulate and simulate and simulate and simulate and do it forever, because the choices that you make are not, one, affecting the market, even your 1 or 2 contracts. They're not really there, so they're not hitting the bid or lifting the ask, right? And the other thing is that you don't have anything at risk, so you're not dealing with the 90% factor, which is your emotion. You know, you may still get antsy when you put on a simulated trade, but it's not costing you anything. At the end of the day, you can wipe it clean, or you can continue to add on to a losing position, and you can hold a trade longer than you ever would because you know, you want to see $1,000 worth of profit today. I mean, come on, it's not real, you know. But it serves a purpose, and it serves a very important purpose, and I want you to understand it, okay? Comprehension time. You've just been given a whole bunch of stuff, and you guys are asking great questions, you know, and you ask a lot of them. All right? So if you've got questions about, well, okay, I'm trying to understand how buyers initiate trade, how I need to get into this. Okay, then we're not at a point yet of total comprehension. So it terrifies me to think that you're trading real money. You know, just terrifies me. You know, what are you doing testing your comprehension with real money? What I need is for you to trade on a simulator and make sure that you're comprehending all of this. You know, make sure that you can spot the entry, spot the stop, spot the target, and execute a trade. Okay, can you do that? Can you do it quickly? Can you get the right fill? Can you get your hand to the right place? Can you move the mouse fast enough to do something? Do you understand exactly where everything is on your trading platform? Are you functional with utilizing these tools? Do you understand the features of our software? If you start using conditional orders and the trade tracker, and you don't have any clue how it's, you know, working with your account, then you're going to go, this thing's not working. Oh my God! And I'm in a real trade. No, we need to make sure everything is smooth sailing. Okay? And I don't mean that you're showing profit. I don't care if you ever show a profit on the simulator. You know, to me, if you're doing your job, you probably should be showing a loss on your simulator. And the reason I say that is because I want you to get yourself into some trouble. That's how you learn. You know, that's how you learn to do stuff. You learn from mistakes. And if you put yourself in a bad trade, you'll have to manage it. Okay? And you do that enough, and it's like no big deal when it's real money. Okay? So we've got to come up with a period of time where you're going to really just try and comprehend all of this. You've had 5 days of it. I would expect that you at least have 5 days of making sure that it soaks in. You can pick this for yourself, you know. But to me, if it were me and I'd just been exposed to something like this, and particularly with a really slow market, I'm going to make sure that I understand it, and I'm going to spend a few days doing it, you know, where it doesn't cost me any money, making sure that I'm on board. But have no illusions. We're not testing your profitability on a simulator. You can't. It's not real. The next phase is going to be testing that comprehension. Okay? And how we do that is we have to have real money there. And I don't want it to be a lot, and I don't care how rich you are. I don't care how many thousands of dollars you can come up with. It doesn't make any sense to risk any more than 1 or 2 lots. Not when we're just testing your comprehension. Okay? Now, with 1 or 2 lots, you really don't have any leverage. Okay? Meaning you don't have any way to really scale out and you know, take advantage of multiple targets, and you know, you don't really have any way to position yourself to be a profitable trader. If you ask around, you're not going to find many people that trade 1 or 2 lots and are actually showing any sort of profit. So when we're testing comprehension, I don't want you to have any profit expectations. Okay? What I mean is that I don't want you sitting here saying, well, I need to make X amount of dollars, and how I'm going to do that is I'm going to trade 1 contract until it's not going to happen. Okay? When we trade 1 contract, we're making sure that we are seeing the entry. Okay? Am I able to come up with the first target, the stop, and the entry and not chase into it, not get into this upside down? Can I make sure that everything that I'm doing is at least 1-to-1? At least 1-to-1. Okay? Can I do that? So just take your trades and don't try and drag anything out, and don't worry about bigger trades and all this other stuff. Focus on whether or not you can see the opportunity. Test your comprehension of it. Make sure that you can execute those trades properly. All right? And if we can do all of that, and you spend time doing that, and whatever your time frame for that is, needs to be part of your plan, you know, then we're going to engage the market. And in order to do that, you have to be able to trade a few contracts. So it may be that you've got a big wall in front of you until you can get a trading account that's big enough. That's great. Doesn't matter. Don't rush into this. People who rush into stuff are you know, you come in here, you're enthusiastic, you're posting everything, you're, you know, slapping your buddies on their backs, and then you're gone in 30 days. You've blown yourself up because you're not willing to follow a proven path of success. You know? And then it's finger pointing time. Well, you said this, and you did this, and you did that. What about what you did? Take some responsibility here, right? This is where we take responsibility, right here, right now. It's our turn. You've been given the tools. You've been given an environment. You've been given as much as I possibly can, and I'll continue to give. But it's now time to start taking responsibility, taking ownership of this, and starting to make decisions. So when that time comes, and we're going to engage the market, we're going to make sure that we've got ourselves set up with at least 2 contracts, preferably 3 or 4, so that we can really test this out and see how we're going to be profitable in life. Right? How are we going to make something out of this? And the reason I say that is because then we have the ability to look at something and say, yes, the initial target is right there. It's you know, 1.5 points away. And beyond that, I've got nothing in my path. And I know that I came up with the target this morning of 45.50. So dang it, that's my target. And I'm going to watch the print all the way up. And if I see responsive selling come in, I'll consider either taking one more position off, or I'll close the position and look for the next trade. You know what's going to happen? You're not going to care about how many trades you get to take every day. You're going to look for 2, 3 trades a day. And you're going to start walking away with 3 to 5 points per contract. You're going to go, son of a gun. Why is this so easy? It's never been easy for me. But you're not going to take 25 trades. You're going to take a couple. You know? And then you're going to go, well, if I can make 5 points a day on 3 contracts, why wouldn't I do it with 6? Right? And so once we know that you're profitable and we've got real targets for you to hit that are functional, guys, I don't want you coming in here and saying, well, I want to trade for 10 points per contract every day. It's not going to happen. Not this way, not the way I trade. But you can make 3 to 5 points per contract easily with very little risk, just waiting for the right setups. You can. And so then we're going to multiply that success. And this is where the great fun of realizing what your goal is and how to get there. You know? Do I need, if my goal is $100,000 a year, do I need to trade 2 contracts for 15 points a day or 20 points a day? Or should I look at it and say, what if I trade 10 contracts for 1 point a day? Hey, who in here feels like it would be impossible to make a point a day? Right? So you end up getting into this multiplication table where you realize you really don't have to have 20-point trades and 10-point trades. You know, what you need are 3 to 5 point trades, or a couple of 1-point trades, or a couple of 1.5-point trades. And when you do that, and you start multiplying that, it very quickly becomes in your grasp to make any amount of money that you want. And you start to understand the risk to reward and the multiplication table of the number of contracts that you need to trade. Now, if I were to sit here and tell you that everything from this point forward is going to be success, I would be a liar, and I would tell you to run away. Okay? Because the day we sign up to be traders, we make the decision that we're going to lose some. Sometimes we're going to be wrong. Okay? And we have to accept that, because if you can't, we're never going to get you anywhere. Losses hurt. Okay, but really, most of the time, it's not the financial loss, it's the emotional aspect of it. Because we've done such a good job to get confident and to try and move forward and never tell yourself, I just can't pull the trigger. I don't ever want to hear that again. You know, we've got to get beyond all that kind of stuff. So we have to know how to deal with losses when they come, because they're going to come. Right? You know, first 2 days this week, I had pretty lousy trading. You know, but you don't hear me sulking about it or anything else. Why? Because I've been doing this a long time. And I'm going to be profitable this month, and I'm going to be profitable this year, and I'm going to move forward. Because I'm a consistent trader, and I don't have to worry about that. The only thing that I have to determine is whether or not I'm making bad trades or bad choices. Okay? And that's how I get on track. Bad trades fall into the category of, it just didn't work out. You did all the work, and it came together the way it should have. And then the condition changed, and it went against us. It just happens. Guess what? No matter what percentages we give you, this is still percentages. It's just probabilities. There's no certainties. So if you take a trade and you can look at it afterwards and say, I did everything right, it just didn't work out. Okay, I can move forward. And if you do that 3 times in a row, then we've got a problem, right? If you think that you've done everything right and everything's come together, then we've got a hitch somewhere. And guess what? I can fix that in a matter of minutes. That's the kind of stuff that I can fix immediately, because I've been doing this for a long time, guys. So if you come to me and you say, look, I took this trade and it was a bad trade, and I think I understand, where something went wrong. Maybe I, wasn't paying attention to the risk to reward or something like that. That's one thing. And if you come to me and you say, all right, here are my trades, and they all look exactly perfect. These are exactly the way that this should have happened, and they all got stopped out. Then I'm going to be able to break that down for you real quick and tell you what went wrong. And guess what? Minor correction. This is going to be something that you overlooked something, okay? And we're going to get it into your head for how you need to approach it the next time, and we're done. Easy to fix, guys. Easy to fix. Bad choices, whole different animal. What bad choices means is that you discard the rules of your strategy. You discard that and you just get emotional about it and you take a trade and you use a bigger, it's like if we just went through all that work and said we don't want to take a trade from 28.50 to 24.50, we know that's going to be a difficult area. And then when it gets down there, you see a responsive buying pattern and you buy it. And then it breaks down, and we talked about how we'd have to have a 4-point stop to even remotely take the trade, but you use a 1-point stop. And then you come to me and say, well, I did everything perfect. It was a responsive buying pattern and blah, 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 blah. Okay. Those are bad choices, right? And you can either fix bad choices by working backwards through the process of your trade, in which case you will be able to repair your bad choices very quickly, and that won't be an issue. Or you can be the emotional type. And look, we're all either, when it comes to traders, we're all either going to be logical or emotional, period. And it doesn't matter which one you are. We just have to know how to attack it, right? Because if you immediately go into a state of depression where this is broken and this doesn't work and this system is outdated and blah, 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 and then you put all that garbage in between your ears, it's going to be hard to get through. Okay? And some of you are going to do it. And you need to know up front the difficulty that you're creating for yourself. I had a little interaction with Eric at the beginning of the week. And, sometimes I feel bad because I feel like I'm jumping on somebody. But guess what? I've had some great emails from him this week. And he recognizes that at the beginning of the week, that kind of attitude of saying, the market beat me today, or I'm up and now I'm down, and I lost again. And that kind of mentality is a loser. Okay? It will cause you to lose and lose and lose and lose. And yeah, and Eric, wouldn't you say that by the end of the week now, you also feel that rather than this being some sort of emotional path for you, is now one of more logic? Now you really understand how things work and the process that you need to go through to get a solid trade-off. So don't you feel like you've been able to eliminate at least a portion of that emotional aspect and get more into a logical mode? Okay? And that's what we have to do. And I really, I am not some loon or something like that that's going to tell you to go meditate or anything else. But you better have your mind right when you sit down. You better be focused, and you better make sure that there's nothing else going on. And, like me, a lot of you have families and you've got other things that fall into your life. And guess what? You're going to have to figure out how to have your time to do this. Otherwise, there's no reason to do it. Okay, because when Finn comes and jumps on my lap and starts messing around in my office, I can't trade. There's no way. It's physically impossible. Think about all the things that I have to be able to do at once to have a successful trade come through. I can't do it. Or if I wake up after a night of doing a little bit too much, whiskey and cigar, I'm in no condition to trade. Why would I even sit down and put money at risk? No way. Right? So you need to have this conversation with whoever else is in your life. And you need to understand that there's got to be a closed door policy from 8 o'clock in the morning to 9:30 in the morning, or 10 or 11 or whatever your hours are. Just because you're working from home or a home office or something like that doesn't mean that you're not working. And if you're going to be serious about it, everybody else in your life has to respect that, just like it's their career that they're going to. It's not, he's just the trader and he works at home, but, for the most part he's doing stuff around the house. No, absolutely not. This is a job. This is a career. This is a path that can create a lot of wealth and happiness for you. So make sure that you're putting yourself in the right environment. You need to have that conversation with whoever else in your life that this affects, so that you can make sure that just a small block of time is all we need. But we know when we need it. We know when we need to be focused, right? We know the best time to trade is going to be at the open and for the first hour, so make sure that you've got that time available. And if you're working another job and you've got other things going on, you're going to need to find another time that works for you, and that may be 2 o'clock in the morning. Okay, because there's pretty good trading at the London Open. But make sure that you set aside some time to really make this work. Now back to losses. What I'm going to tell you is that if you get upside down, the worst thing that you can do is throw away your strategy just trying to get back to a number. Okay? So if I get upside down and I go 3 or 4 points upside down, if I get into a trade that I know should have a 2-point target, but I say, I just got to hold this and get back all of this, I'm an idiot. I don't know how else to put it to you. If you just came up with a trade strategy that has a 2-point target and you say, yeah, but I'm down 4, I really need to get 4 out of this, I'm sorry, we can't work together. I can't handle stuff like that. It's just idiotic. All right? Don't shoot for the moon just to recoup. You will recoup your losses if you trade in a consistent manner. Okay? If you make the same decisions time and time and time again, you go through this logical process of getting into a trade. Believe me, you're going to have days where you screw up and something goes wrong, or you buy the high of the day and you just think, God bless, why wasn't I paying attention? It's going to happen. All right, so don't get on the other side of that and say, oh, well, now I've got to, all my trades need to be for a lot bigger, because they're not going to. You're going to end up throwing them away. That's not how we get back on track. We look for opportunities, we assess the risk, and we get into a trade. Right? Now, the exception to that, and I always put this on here, and it kind of requires a little bit of explanation. If you've really taken a dive, and you feel like it's going to offset your month too much, and you really need to get back on track, the first thing that you have to do is get back on track. So don't do anything until you feel that you've got a grip. Were you taking bad trades or making bad choices? And if you were taking bad trades and you had a lot of them come together at once, then we need to tweak something. It's probably something very minor, and we'll fix it very fast. If you were making bad choices, have you gotten your head straight? All right? And if you can say yes to whichever one of those it was, and you feel confident again in your trading, then increase your size. Don't increase the number of trades that you take or how loosely you look for opportunity. Stay very focused on being still just as much scrutiny as you possibly can before you put on every trade. Before you put on every trade, I want you analyzing the risk to reward. Look at it. Tell yourself, where are we trading? Is it reasonable? Where's my target? Where does the stop have to be? But if you put yourself in a position where you increase your size, and I'll do this a lot. Like, if I have two days like Monday and Tuesday where just couldn't get on top of myself in the morning and then teaching in the afternoon, and you just think, God, well, the next day I come in and I'm trading twice as much as I normally do. Okay? And it's a good way for me to be functional, but obviously you've got to be consistent and confident. I don't want you to go upside down and go, wow, I need to get back on top, so let me double down. No. Get your head straight first. Figure out if it's your trading or your choices. Fix whatever it is. And then if it's really going to offset something and you feel like you've put yourself upside down so much that it's not realistic for you to average the month out or something like that, then yeah, that's what I want you to do. Only if you're comfortable doing it, It's something that you've got to work with. So, this is the plan that I'm laying out for you. I want you to think about it this weekend. Spend some time thinking about it. Write some stuff down. Think about the things that are important to you. What do you need to do to replace whatever income it is in your life? Or what are you expecting to get out of this? Is it that you've got your heart set on being able to take a fabulous vacation every year? What's that going to cost? Put a number value on it. Do that. Write down some big, big, big goals. Big goals, man. I don't care what they are. Tell me you want to make $1 million a year in 3 years. I'll tell you how to get there. Okay? I don't care what your goals are. It doesn't make any difference. But get them together so that you've got an idea. Okay? And then let's be realistic about it. Come up with some stuff for where you expect to be in the next couple of months and where you want to be by the end of this year. We're just starting a new year. By the end of 2010, what are your expectations for your trading? I'll get you there. I will. And then step back a little bit from that and say, all right, if these are my goals and DB says he's going to help me do this, and we're going to come up with a big plan for how we're going to get there, then I need to think about what's right in front of me. How much of this stuff am I really comprehending? Where are some loose ends? What do I need to work on? I need to spend the next week just executing some trades. Just execute some trades. Get on the simulator, and I don't care if they're trades that you look at and you go, yep, the risk to reward doesn't match up. I want you to execute the trade anyways. I don't care if they're good, bad, or anything else. The more time that you have a trade on that you're trying to manage, the more you're going to learn about how the order flow works. Okay? I don't really care whether they're good, bad, or indifferent, as long as you can separate them before you execute the trade. Because that practice of having a week of just really intensely trying to understand what's going on will be huge. And for some of you, you may need 2 weeks, a month, 2 months. It doesn't matter. This is not a competition between anybody else. But come up with a time, whether it's a week, 2 weeks, a month, 2 months, 6 months, and write it down and say, this is how long I want to spend making sure that I comprehend this. Okay? And I don't care. I do not write anywhere down there that you need to see on a simulator X amount of profit, because it's not even remotely real. This is a time frame for you to make sure that you are comprehending this. Okay? And then we got to set up a time frame for you to test that comprehension. Okay? So if you tell yourself, I'm going to trade for 2 weeks on a simulator. That's my time frame, 2 weeks. And I expect to really be able to comprehend this by the end of that. At the end of 2 weeks, let's have a little Q&A. Do you really feel like you comprehend? Are you comfortable with everything that you've done with the simulator? We have to check that and say yes or no. And if it's no, we need more time and we better figure out why. This is the goal I set. Why am I not done with this? All right. Then we've got to come up with a time to test that comprehension, and that means putting money at risk, guys, with no real profit expectations either. You think, God, that's so backwards. Guess what? What about this week has been something that you've seen anybody else ever teach? Very little. So this may sound backwards to you, but trust me, it works. Just make sure that when you put money at risk, you don't freak out. It's not about making money with one contract. It's about making sure that you don't lose it. If you break even with one contract, that's wonderful. If you make $50, that's great. But if you just are losing your mind every time you put on a trade, I don't ever want you to put on any more than that. Don't ever put on any more than that, because this is not for you. It cannot be a heart attack moment every time there's something at risk. And when you've tested your comprehension and you're comfortable that yes, I can execute the trade, and yes, I can spot them, and yes, I can get my finger on the mouse, and yes, I can do all of this, then it's time, right? Time for the market engagement, and we need to have a, come on, I'm going to do a profit test. How long do I need to test my profit? 1 week, 1 month, 1 day, 6 months, what? Come up with that number. How long do I expect to sit down and actually test whether or not, when I put on 2 or 3 or 4 contracts, whether or not I'm really profitable? Because you're going to have some hiccups, and we're going to have to tweak some things. I had a new student in November, and he had a really good start, and then he really ran into a wall, and then now the guy's profitable every day. Right? But we had to tweak some things. There were some things that just were not agreeing with him. When we had big breakout days, it was just like, man, I need to step away from the computer because I'm just going to lose money today. And when we consolidate, and it's about 50% of the time, and when we're actually it's more than that, it's about 80% of the time that we're trading in ranges. So, those are the days that he makes a lot of money. Well, wow. So if he stops trading on breakout days and just trades on days when we're trading in a range, he's profitable. Guess what? Now he's profitable all the time. So, took a little while when he was doing his profit test to make sure that it was functional. And now he's set himself up for he knows how much he needs to make and what he needs to do to get to the next level, to multiply, because we've got to get him to his goal. And he needs to be able to leave his dead-end job and enjoy life. And he knows how much that's going to cost. And he needs to get there. So think about it this weekend. Write down some notes. Send me something if you want. I'm more than happy to walk through this with you. It's what I'm here for. Most of the traders that have been here a long time will tell you this is the most important thing that they ever did. And you think, God, really? Really? Out of everything that you learned this week, the most important thing is for somebody to tell you to come up with a plan. Guess what it is? Okay, well that's boot camp. I'll answer any questions. I see some that are on the screen. I need to scroll up and get to some other ones. So congratulations on making it through the week. Very happy to have had the opportunity to work with all of you. Obviously your time here is not done. As I said, this is the beginning. This is the beginning. Get yourself off to the right start. All right, I'll take any questions you guys have.